Chapter 2, Introduction to Securities Market. The securities market provides an institutional structure that enables a more efficient flow of capital in this economy. If a household has some saving, such saving can be deployed to fund the capital requirement of a business enterprises through the securities market. A securities represents the term of exchange of a money between two parties. They are purchased by investors who have the money to invest. Security ownership allows investors to convert their saving into financial assets, which provide returns. Security issuance allows borrowers to raise money at a reasonable cost. Primary and secondary market. Primary market. The primary market, also called the new issue market, is where issuer raise capital by issuing securities to investor. Fresh securities are issued in the market. Various methods of issue in the primary market: primary issue, IPO, FPO, right issue, private placement, preferential issue, qualified institutional placement, onshore and offshore offering, offer for sale, employee stock ownership, foreign currency convertible bond, depository receipt, anchor investor. Secondary market. The secondary market facilitates trades in already issued securities, thereby enabling investor to exit from an investment or new investor to buy already existing securities. An activity secondary market promotes the growth of the primary market and capital formation. Since the investor is in the primary market, are assured of a continuation market where they have an option to liquidate or exit their investment. Let's look at the various terminology in the secondary market: over the counter, exchange traded market, trading, clearing and settlement. Market participant and their activities. Stock exchange. Stock exchange provide a trading platform where buyer and seller can transact in already issued securities. Trading happens on these exchanges through electronic trading terminals which feature anonymous trading matching. Depositories. Depositories are institutions that hold securities, share debenture bonds, government securities, mutual fund units of investor in electronic form. Currently, there are two depositories in India that are registered with SEBI: Central Depository Service Limited and NSDL. A depository particular participant (ADP) is an agent of the depository through which it interfaces with the investors and provides depository services. Depository participant enables an investor to hold and transact in securities in the dematerialized form. Trading members, stockbroker, are a registered member of a stock exchange. They facilitate buy and sell transactions of investor on a stock exchange. Authorized person are agents of the brokers previously referred as a sub-broker and are registered with the respective stock exchange. APs help in reaching the services of broker to larger number of investors. Custodian is an entity that is vested with the responsibility of holding funds and securities of its large clients, typically institutions such as banks, insurance companies, and foreign portfolio investors. Clearing corporation play an important role in safeguarding the interest of the investor in the securities market. Clearing agencies ensure that members on the stock exchange meet their obligation to the delivery of funds or securities. Clearing banks act as an important intermediary between clearing members and the clearing corporations. Every clearing members need to maintain an account with the clearing banks. Merchant banker are entitled entities registered with SEBI and act as an issue manager. Investment banker or lead manager, they help an issuer access the securities market with an issuance of securities. Underwriters are intermediaries in the primary market who undertake to subscribe any portion of public offers of securities which may not be bought for investors. Mutual fund. Mutual fund are professionally managed collective investment scheme that pools money from many investment investor to purchase securities on their behalf. pension fund are established to facilitate and organize the investment of the retirement fund contributed by the employee and the employer, or even only the employee in some cases. Insurance company core business is to insure assets. Depending on the type of assets that are insured, there are various insurance companies like life insurance and general insurance. AIF. The SEBI regulation 2012 define alternative investment fund as one of which is primarily a privately pooled investment vehicle. Under the SEBI AIF regulation 2012, we can list the following types of fund as AIF: venture capital fund, angel fund, private equity fund, debt fund, infrastructure fund, SME fund, hedge fund, and social venture fund. Foreign portfolio investor is an entity established or incorporated outside India that propose to make investment in India. These international investors must register with SEBI to participate in the Indian stock market, securities market basically. Investment advisor work with the investor to help them decide on asset allocation, make a choice of investment based on an assessment of their needs, time horizon, return expectation, and ability to bear risk. EPFO is a statutory body set up under the Employee Provident Fund Miscellaneous Provision Act 1952. NPS is a pension cum investment scheme launched by the Government of India to provide old age security to citizens of India. Family office can be defined as the ecosystem which the family builds around itself to manage its wealth. Corporate treasuries. Traditionally, the role of corporate treasury has been that of manager of financial risk and provider of liquidity. The focus area of corporate treasuries has been debt management to capital structure management, with the key responsibilities of raising long term funds and minimizing the cost of capital.